April 9th, 2025, a date that would soon be etched into the memory of millions across Indonesia. For most Indonesians, it began as just another ordinary day. Children heading to school, vendors setting up their stalls, and office workers braving the morning traffic. But beneath the surface of daily routines, something was about to change dramatically. Suddenly, news broke. Their money, the rupiah, had dropped to the lowest it's ever been. The currency plummeted to 16,957 for every US dollar, a number that sent shockwaves through the financial world and left many Indonesians stunned. This was even worse than the infamous record set during the 1998 Asian financial crisis, a time many still remember for its hardship and uncertainty. In the heart of Jakarta's financial district, traders watched their computer screens in disbelief as the numbers kept tumbling, each tick downward deepening the sense of panic. The day before, the rupiah had already hit 16,850, a warning sign that many hoped would be temporary. But now it was clear, this was no ordinary fluctuation. Warning bells were ringing loudly, echoing through banks, offices, and homes alike. For many, these numbers seemed abstract, just figures on a screen. But soon the real effects would be felt at home. Prices at the market rising overnight, savings shrinking, and a growing sense of worry about what tomorrow might bring. The drop had been steady, a slow erosion that now threatened to become a landslide. Just a few weeks earlier, the rupiah was already hovering near its lowest point in over 20 years, but few expected it to break through that floor so suddenly. Since President Prabowo Subianto took office in October 2024, the currency had lost about 8% of its value, a sharp decline that raised tough questions about the country's economic direction. This wasn't just a bad day for money markets, it was a problem for the whole country. Small business owners, families, and workers all felt the pressure mounting. The big drop happened because of a perfect storm: worries at home, global economic troubles, and a growing sense of uncertainty that made people lose trust in the future of the rupiah. News spread quickly, from the frantic trading rooms in Jakarta to living rooms across the archipelago. People everywhere asked the same questions. Why was this happening? Who was to blame? What did it mean for the future? Would jobs be lost? Would prices keep rising? And would life ever return to normal? Could anything stop the rupiah from falling further? Government officials rushed to emergency meetings, searching for answers and solutions. The country waited anxiously, glued to their televisions and phones, hoping for reassurance as years of hard-won economic progress seemed to hang in the balance. The story of the falling rupiah was just beginning, and for Indonesia, the days ahead would test the nation's resolve like never before. Much of the rupiah's recent troubles can be traced back to uncertainty about what direction the new government would take. Investors, businesses, and everyday Indonesians all found themselves asking the same question: what comes next for the country's economy? President Prabowo's ambitious proposals, like a $30 billion plan to provide free school lunches for millions of children, sparked debate across the nation. People wondered not just about the benefits, but also about the costs. Would the government be able to fund such a massive program responsibly? Or would it risk overspending and putting pressure on the country's finances? On top of that, talk of making the central bank less independent and introducing new rules to limit foreign companies' influence made investors even more uneasy. These ideas raised fears that Indonesia's economic policies could become less predictable and less friendly to international business. The government's decision to start a $20 billion special fund for national wealth, along with moves to allow more military officers into key government positions, added to the sense of unpredictability. For many, it felt like the rules of the game were changing overnight. All these changes combined to create a climate of anxiety in the money markets. Investors found it increasingly difficult to make long-term plans, unsure of what new policies might be announced next. Poor communication from government officials only made things worse. As rumors spread about high-level resignations and policy disagreements, people's confidence in the government's ability to manage the economy began to slip. As a result, foreign investors started pulling billions of dollars out of Indonesia's stock market, worried that their money might not be safe if the situation got worse. The main stock market index tumbled, hitting its lowest level in 3 years, a clear sign of just how nervous investors had become. When trust disappears, money quickly follows. People rushed to exchange their rupiah for foreign currency, and businesses hesitated to invest. The country's currency, already under pressure, took another hit. In moments like these, what the government does next can make all the difference. The world was watching to see if Indonesia's leaders could restore confidence and steady the ship. Indonesia's problems weren't just from inside the country. Big troubles around the world played a major part. Trade fights got worse, with the US putting a 32% tax on goods from Indonesia, which cut down how much money Indonesia made from selling things abroad. China's economy slowing down meant less demand for Indonesia's raw materials, hurting the economy even more. Investors, scared by global uncertainty, took their money out of developing countries and put it into the safer US dollar. The result? A stronger dollar, a weaker rupiah, and more pressure on Indonesia's economy. Bank Indonesia said these international problems were a key reason for the currency's drop. The world's ups and downs made Indonesia vulnerable. The rupiah was caught in the middle of all this. As trust disappeared, market forces made the rupiah fall even faster. People and companies rushed to buy US dollars to make payments abroad. Foreign investors took billions out of stocks and bonds, causing the Jakarta stock market to drop. Indonesia's 10-year government bond interest rate shot up, making it more expensive for the government to borrow money. Reports of low government income and big spending plans made people fear if the government could really pay for everything. Markets worried, could the government afford its promises without making the currency problems even worse? Even normal seasonal things like the long Eid holiday kept the rupiah under pressure. The market's message was clear: risk was going up and money was leaving. The cycle of fear just kept getting worse. The falling rupiah hit everyday Indonesians hard, touching nearly every aspect of daily life. Suddenly, the value of their money dropped, and people across the country felt the impact in ways big and small. Goods brought in from other countries, from fuel to food, became more expensive, making prices go up. Imported items that many families relied on were suddenly out of reach for many, and even local products saw price hikes as transportation and production costs soared. Families found their money didn't go as far as prices rose, especially for basic needs. Parents had to make difficult choices, sometimes cutting back on nutritious food or skipping small comforts just to get by. The middle class got smaller, with millions of people becoming poorer as their money could buy less. Many who once felt secure now found themselves lining up for government aid or subsidized goods, worried about what the future would bring. Businesses faced much higher costs for materials they bought from other countries, forcing them to make tough choices, either lose money or raise their own prices. Small business owners, in particular, struggled to keep their doors open and their workers employed. Some cut back on imports, which slowed down production and put jobs at risk. Factories reduced shifts or closed temporarily, leaving workers uncertain about their next paycheck. Companies with debt in foreign money struggled to pay it back as the rupiah got weaker. Loan payments ballooned overnight, threatening the survival of many businesses and putting even more jobs in jeopardy. Critics said the government was focusing on popular programs but missed the urgent need to make the economy stable. Protests grew as people demanded real solutions, not just promises. For many, the crisis wasn't just about numbers, it was a daily struggle to make enough money to live. Every day brought new worries about rent, school fees, and putting food on the table. The pain was real, and it was everywhere. From city streets to rural villages, Indonesians faced uncertainty and hardship, unsure of when relief would finally come. Bank Indonesia fought back, stepping into the money markets to help the rupiah. The central bank used its money reserves to buy rupiah and make the market stable, doing this many times throughout 2025. It also stepped into the bond markets and used financial tools to manage risk. Interest rates were kept steady at 5.75%, putting currency stability first over economic growth. Higher interest rates aimed to attract foreign investors, but they risked slowing down the economy. The challenge was huge, fighting negative feelings at home and abroad. These actions could buy time, but they couldn't fix the main problems. The world watched to see if these steps would bring back trust. Time was running out. The rupiah's drop past the levels of the 1998 crisis brought back painful memories. For many, the Asian financial crisis meant social unrest, businesses failing, and big political changes. Today's Indonesia is different. Banks are stronger, and the country owes less money to foreign countries. But the fear of it happening again still remains. The current crisis is caused by wrong policy choices and global shocks, not by a weak financial system. Still, the echoes of 1998 are a warning. Trust can disappear very quickly. Experts say it's important to manage things carefully and communicate clearly. The need to act is real. No one wants history to repeat itself. The stakes are high, and the lessons from the past are very important. Economists see the rupiah's fall as a crisis of trust. Ahmad Sukasono argues the government isn't dealing with the real pain, the shrinking middle class and struggling businesses that make things. Hal Hill and Arianto Patunru warn that uncertainty is making investors leave, which makes things worse. Former Finance Minister Chatib Basri points out how vulnerable the middle class is, with little savings to handle tough times. Radhika Rao suggests that clearer communication from the government could help bring back trust. Ryota Abe notes that high interest rates might help the currency, but risk slowing down economic growth. Everyone agrees, trust must be rebuilt, and fast. The human cost of not doing anything is too great. Indonesia is at a turning point, facing its hardest economic challenge since the late 1990s. The way forward needs clear, believable plans and strong action. If the government brings back trust and global problems calm down, the rupiah could get better. If not, high prices and money being able to buy less may continue, risking social problems. The government must balance its big promises with being careful about how it spends money. Stability is key for investments, jobs, and the future of 280 million Indonesians. This crisis is a test of leadership and how strong the country is. The choices made now will shape Indonesia's future for years to come.